welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand what's really going to be the trading setup that you can keep an eye out on. How should the markets be really looked at today in terms of trade, the key stocks that you need to watch, what are brokerage houses really looking at in trade today, and everything that will be important as global cues for you to track before the markets open. So remember, as of yesterday, the markets witnessed notable intraday movements with broader indices outperforming. Mid caps led the change. Despite the Nifty largely flat by the end of the day, we've actually seen mid caps delivering significant returns as of yesterday and helping the markets to overall get a boost on the sentiment front. Now, Sensex definitely dipped about 28 points to settle at 75,939 yesterday. The Nifty edged lower just by about 12 odd points, ending at 22,933. However, it was the Nifty Bank Index that actually saw robust performance, and it gained about 483 points, finished at 49,570. When you talk about sectoral action, it was the pharma that really struggled in trade, showing losses before making a slight recovery by the end of the day. IT stocks also remain largely under pressure, but stock-specific action was quite robust. Stocks within the defense pack really rallied sharply in trade, and we also saw the banks and the financial stocks definitely lending support to the overall markets as well. Now, what market experts are seeing is that 20 to 800 is being seen as a critical support, while 23,100, 23,150 is emerging as a resistance as well. And we need to see a decisive breakout of this range to really see the key direction in which the markets will move forward. Now, as of yesterday, as far as the foreign flows are concerned, domestic institutional investors again bought 1957 odd crore rupees worth of stocks, while the FIIs, they recorded a net sale of 1881 odd crore rupees again. So after a day of buying, again sell-off coming in. Now, stock markets today will watch out for the global cues, of course, including developments around the US President Donald Trump's trade tariff talks, Russia-Ukraine talks, along with its stock-specific news will be important to watch as well, and the Nifty weekly F&O expiry. All of these factors will be important to watch out for today. So US Fed's policy has showed that officials are concerned about the upside risks of inflation due to possible changes in the trade policies by Donald Trump. The effect of these tariffs could be inflationary, and the US economy would be a key factor, and therefore they are now going to be really studying the impact of all these Trump tariff talks on inflation before taking a rate cut decision. For now, it's a hold is what is getting sensed out of. Following this update, we've seen the S&P 500 rise by about 0.2% yesterday. Nasdaq added 0.07%. Dow Jones advanced by 0.1%. So slight positives across the Wall Street. Asia Pacific markets in the morning trade today, they were largely lower. We've actually seen the investors are assessing the US Fed Reserve's policy updates, minutes of the meeting, as well as Trump's 25% tariff threat on semiconductors, on autos and pharmaceuticals that could impact these sectors starting April 2nd onwards. So that will be important to watch. Remember, that was one of the key reasons why pharma stocks really dragged in trade, and the autos also came under pressure. Now, apart from that, US stance on Ukraine under President Trump has surprised investors. US President Donald Trump has said he called Ukrainian President Volodymyr Zelensky as a dictator and warned that he had to move quickly to secure peace or risk losing his country. That's the kind of statement that's come in. So again, we have to look at how the global unrest picture is going to emerge. Let's get back to our guest now. Let's welcome Mr. Kush Golasara, market expert, who's with us on the show today to help us understand the market trend and the trajectory. Kush, morning to you. Good to have you with us. So it's again global cues that are going to be important to track here, as it is very, really in fag end of the, earnings. Only one or two earnings are remaining within the major band, but largely they are out. Your sense of how are you looking at the current volatile, range-bound environment that we are looking at in the market?
Good morning. Definitely, I think there will be a range-bound momentum unless we break 22,800 on the downside or 23,150 on the upside. I believe we are still going to be in a range-bound momentum. Stock specific, definitely we'll see some sectorial, moves based on the tariff or maybe some domestic cues. But overall, I think we are going to be range-bound. But today, let's see how we react to the global future markets, because futures were in some pressure. So definitely we are looking towards future markets. If we break 22,800 today, then I would recommend to square off all the longs, if not going short.
Okay, fair point. Any key stocks that you're looking at, Kush, today for the investors to keep a track on?
I think key stocks which I look are Reliance. I think Reliance got weak yesterday from the opening minutes. So if at all Reliance futures break below 1220, I believe that would be the leading market on the downside. So Reliance is on my radar for the short candidate.
Okay, short candidate Reliance Industries. Markets have started to tick in pre-open. There is a flattish with a move on the negative side right now. 22,903.1% lower. 29 points of a downtick coming in on the Nifty. Let's look at the heavyweight banks, HDFC, ICICI Bank, to see whether there is a continued momentum in the banking names from yesterday. Remember, it was the large private sector banks that were supporting the sentiments yesterday. Half odd percent uptick on the HDFC Bank today, 1735. That's almost 8 rupees higher in trade. Let's also pull up ICICI Bank. That's declining, 1245, 1.3% lower in trade. Let's also pull up Axis Bank, and Kotak Mahindra Bank to see how the trend is shaping up beyond the first two stocks. 1% lower for Axis Bank at 1000. Let's also pull up Kotak Indusint, half odd percent declining for Kotak. So that's the trend. So largely on the negative side for the major banks. Let's pull up the NBFC majors like Bajaj Finance to see how some of the NBFC trends are moving in. And then we'll pull up 5% down, 8,010. I hope this improves for the better, but there is a sharp downtick on this one. Let's actually look at the IT names. Again, IT names were under pressure yesterday. TCS, Infosys, Reliance is up by half odd percent in the pre-open trade. Let's see how that one shapes up. TCS 1% down, 3740. Let's also pull up Infosys and Wipro to see how things are shaping up there. Muted trend on Infosys, 1804 currently. But let's also pull up some of the pharma stocks to see whether there is a continued decline from yesterday. Sun Pharma, Dr. Reddy's, Cipla, Divis Laboratories. Let's pull up these stocks to see how they are going to be reacting today. Sun Pharma just muted 1672. So that's the move. But we'll actually look at some of the other stocks within the stocks to watch list as well, so that you can keep an eye out on all of these stocks today. DLF, keep an eye out on this real estate stock, viewers. NCLT has approved the amalgamation and demerger of DLF subsidiaries. So that's going to be important to watch. Ticks haven't started on DLF. Let's see how that one shapes up. Vari Energies, there's a order supply of 362.5 megawatt per solar modules that have been awarded, and therefore you could see some uptick. Yes, 1.8% higher. MapMy India is going to be important to watch. It now supports 9 regional languages, so advancement in the kind of catering to and reach that it has talked about. C Info Systems, that is 1.7% higher. Orchid Pharma, its facility has passed the US FDA inspection, maintaining approval, so that also could be reacting on the positive side. But HFCL has signed an agreement with BSNL for 2,500 crores. That also could be important to watch. Again, the telecom space. Remember, yesterday we were talking about Bharti Airtel. Today, again, HFCL, the ancillary space, BSNL, these will be important to watch. JK Cement will be important to watch. It's faced a 13 crores tax demand. So that also will be important to watch as well. We can also keep an eye out on Tata Consumer Products. There's a reappointment there of the MD and CEO for next 5 years. So clarity on that front. JBM Auto from the electric vehicle space will be important. The company has been awarded a tender for 1,021 electric buses. So keep an eye out on JBM Auto too. That will be important. Within the auto space, you can also look at M&M as well to see how that one will open. It has partnered with Anduril Industries to develop autonomous maritime systems and AI-driven counter UAS technologies. So those will be important to watch. 0.7% of a decline right now. But let's get back to Kush. Kush, in this volatile space, is there any key sector that you're looking at where probably some signs of reversals are already beginning?
Maybe PSU stocks were
Yes.
we are seeing some reversal, but follow-up buying is necessary. Yesterday we saw good moves on many stocks like RVNL. There was PFC, RFC. So, but today we need to see some follow-up action. But let's see. Pre-open looks weak. So, is there going to be any major upset or not, that would be decided in the opening minutes. So I believe, PSU stocks should be in focus. If at all we see recovery in the market, I think PSU stocks will lead, especially something like RVNL and PFC are on my radar for the buy side.
Okay, got that. So we will keep an eye out on these PSU stocks that could be again looking to get a lot of attraction from the investors and viewers at large too. Okay, let's also look at some of the other pockets. What's happening in the pharma pack? Do you think this tariff talk is going to be really negative for the pharma space? The index was the top performing one, in the recent run up. What next now for this pharma space?
Definitely, I think pharma space is going to see get a good hit. So rather than trading on pharma stocks, I would rather advise clients to start SIP in pharma thematic funds, because we are
Okay.
going to time. We don't know where the base would be, what would be the effect of tariffs. So difficult to pick up the stock, and difficult to pick the base on the stock. So definitely, I would rather start investing in a SIP form in pharmaceutical thematic funds like Tata Pharma Fund or maybe ICICI. So it's better to avoid pharma sector as of now for trading, because it's highly volatile to tariff news.
Okay, got that. So as far as the pharma space is concerned, need to be cautious at this point. Okay, we have the rupee open. So it's at 86.85. And this is versus yesterday's close at 86.95. So slightly stronger than yesterday's what we see the Indian rupee opening against the dollar. We'll keep an eye out on that. In the F&O segment, there are going to be some interesting changes. Irida and Tata Technologies will be included in the F&O segment from March series. Let's discuss, Kush, if that will be important to watch. Irida, Tata Tech, how does the approach change to these two who will be included in FNO?
Definitely, IRDA is looking good. Yesterday, we have seen some good move. Bullish engulfing pattern has also been confirmed on the bottom price. But today, we need to see some momentum over 173. So, if at all we see some movement about 173 on IRDA, that would be in confirmation of the reversal pattern which have been witnessed yesterday. So, definitely, it's a good reversal stock. We are seeing, 111 point downside on Nifty pre-open. So that is a little bit concern. So first 15 minutes is going to be crucial. So IRDA is my pick. Tata Technology maybe not at current levels, but IRDA, if it will be sustainable 170, definitely a good pick.
Fair point. Now, Kush, I want to also understand your view on the auto pack. We did discuss pharma, and of course, that also has an impact of Trump tariffs coming in. Auto is also going to be probably seeing this Trump tariff impact playing out from one side. On the other side, we have Tesla starting hiring in India. They are looking for showroom spaces as well. Do you believe both these continue to be probably double whammy for the entire auto space? Should one really look at it with a eye of caution now?
Definitely, I think, auto space is going to be remain in pressure, because if you look at both the side, if at all there are tariff wars, definitely auto will be impacted. If not, just Trump has said that I will apply the same duty what you apply to us. So if not, then Tesla is coming to the India. So if Tesla is coming to India, competition will rise. So EV stocks like M&M and Tata Motor will get a hit. So definitely, overall, I think whether tariff war or not, auto sector is going to wipe off some premiums that they enjoyed until now.
Oh, okay. So some premiums could be shaved off from the auto space because of these new headwinds that one is seeing at this point in time. Although the large makers of India, including Mr. Anand Mahindra, have said that they are still very much around through all the disruptions that were seen in history, and therefore they are not very worried about stuff. So that's something that the incumbents are saying. We'll keep an eye out on this space too. Now, I want to also take up IT space with you then. Again, IT was lagging yesterday. There has been a lot of divide in terms of how people are looking at the IT space. What is your own expectation here in terms of the IT pack?
I think yes, IT stocks will definitely take a hit. We have seen a good rally in recent past, but now I think 40,500. The level on the IT index is 200 days average. If at all we trade below 40,500 today on IT index, we may see some more downside, approx 2 to 3% as a sector. So definitely it's a short, but fresh shorts only below 40,500 on index. Stocks which can be high beta for a trade, and something like Coforge. I believe Coforge can be a stock where you could short your trade. So keep an eye on IT index, but take a trade on Coforge.
Okay, fair point. I hope this has got you some understanding on how you should be looking at these IT names as well. Defense back for you, Kush. Yesterday's uptick, has that given you any fresh entry, probably suggestions that, this bounce could probably sustain, or is it just a dead cat bounce in the defense pack? How are you really looking at the entire space? Yesterday, many stocks pumped up almost 10-12% or also in intraday levels.
I think defense was a sector, and mid cap sector yesterday was a bounce back, but today let's see what's happening, because looking at the pre-open, I'm a little bit confused what to trade, because
Hmm.
yesterday it was losing, but now we are seeing a weak opening, and especially stocks like HDFC Bank, and they all are opening gap down. So uh, large caps are looking weak while mid cap and small cap is looking strong. So it's all a little bit confusing. So let's wait for first 20 minutes. I would suggest don't take any fresh trades in small cap and mid cap in opening minutes.
Okay, don't take any fresh trades in small caps and mid caps because again, as the pre-open trades have settled, the Nifty is down by about half odd percent, 20 to 821. And within the Nifty, again, you are probably looking at half the stocks which are still lower, although we could be looking at some upticks continuing as well. Within the mid caps, also mid caps down 0.2% in the pre-open trade, small caps down 0.3%. The index level still appears to be weak. All the sectors appear to be weak right in the pre-open trade. Half a percent decline for the banks. Autos down 0.3%. You have IT down half odd percent. Pharma down 0.4%. Realty down 0.3%. Consumer durables 0.1%. All the sectors could be opening with slight losses is what we are looking at. So we'll keep an eye out on that. Real estate. Let's discuss that too. How are you looking at the real estate space now, Kush? This was one of the key sectoral winners from last year. Prices have come off in the recent correction. Are you spotting any trends? Is anything looking good for a buy or add at this point?
No, definitely. Yesterday we saw some good move on Macrotech and DLF, but I don't think it was a convincing move from the volume side. So from the price side, maybe we have seen some good breakout yesterday, but still I'm not convinced with the rally. I think market is going to be remain subdued for the real estate. I don't think it would be as good as 24. So sales are going to be subdued. So avoid investing in real estate sector as of now.
Fair point. Well, Kush, we'll thank you on that note for being with us in the morning edition today to share with us all your thoughts, and we'll keep an eye out on all the sectors and stocks that you mentioned. Viewers, we'll also welcome Ruchi Jain, Vice President and Head of Equity Technical Research Wealth Management at Motilal Oswal Financial Services, to be with us. Morning, Ruchi. Good to have you with us. Tell us what's your call on the index and key stocks that you'd like to watch. 30 seconds for you before the markets open.
Hi, very good morning, Sakshi. Well, definitely markets would continue to remain volatile until we give a breakout about 23,000, 23,050 resistance range. I think the upside would be capped and we would see more of a consolidation phase continue in the markets. We are focusing on some stocks which are showing good relative outperformance. Kotak Bank and UPL are the two names where, irrespective of market moves, sustainability is there. So we recommend going long on these two names. And of course, Dabur is one stock where we are recommending to go short because FMCG space, as of late, has been showing a relative underperformance.
Okay, got that. So that's as far as what the expectation was on the market as well as on the key stocks that Ruchit is mentioning. We already have the tick starting 22,837.4% lower for the Nifty. So it's a downtick as far as the major index is concerned. Let's also look at the Nifty Bank to see whether that also is slipping right in the opening tick. The Nifty Bank also down by about 0.4% in the trade today. So we look at that as well on the declining side. Among the key sectors to watch also, let's pull up some of the sectors to see how the trend is shaping up. Well, most of the sectors are actually down in the red. You have the Nifty Bank down, you have financial services down, autos, IT, pharma, starting on the back foot, realty. All of these stocks and sectors are actually starting on the back foot in trade today. Let's look at some of the key stocks there that are important to watch. Let's look at the banking heavyweights first. HDFC, ICICI Bank in the pre-open trade, they were opening cap down. So if that's the case, then this is the space to watch out for. Percent lower for HDFC Bank. So these are heavyweight counters. When there is a sharp dip here, you actually believe that the markets will take some time to really pick up in pace. ICICI is back with a positive bias, Kotak down 0.3%. That's how the reopen trade is shaping up. Broader markets, mid and small caps, both down. Small caps down 0.3%, mid caps down 0.4% in the opening action as well. Now, when we look at the advanced decline ratio, 742 advances to 840 declines, slightly skewed towards the declining side in trade today. Top Nifty losers are Bharti Airtel, IndusInd Bank, M&M. In trade, all are declining by 0.7 to 0.9%. BPCL, ONGC, L&T, these are the counters that are declining in the opening trade as well. And let's actually see some of the others. Sensex is down by 0.4%. Let's look at some of the other stocks that were important to watch, which we had marked out for all of you in the stocks to watch list. Let's look at Vari Energies, order flow there. So that could be probably showing in. There is a lot of volatility in the opening action now. Broader markets are actually higher in trade. So we'll just wait for it to settle down in the next few minutes. As far as some of the top drags are concerned, ITC, Maruti, Wipro, HDFC Bank, these are the heavyweight counters that are declining in page today. However, Tech Mahindra is opening on the positive side. You have ONGC also that's now on the positive side. But auto space, Maruti, M&M, both are declining. Eicher Motors declining. Remember, it's the Trump tariff talk that is weighing heavy on the auto space again. And on the pharma space also, you can see Sun Pharma down by 0.6% in trade. So heavyweights within the pharma pack are again declining. You also have the consumer durables and the FMCG majors declining in trade. IT is also down. So TCS is down in trade. Consumer durables, that space is also lower in trade. Rujit, how do you assess the opening impact?
The soft opening was much expected because of the global cues. We have seen that most of the global markets have seen a sell-off. But of late, we have seen that in last few weeks, when the global markets were rallying or going higher, markets did not react much to that. So I think it's just an opening correction that we have seen. But overall, I think we would continue to see some consolidation within the range in the near term. 22,750, 800 remains a very crucial support for the Nifty. And on the high side, 23,000, 23,050 continues to be the resistance. So I don't think we should see much significant price-wise correction, but rather a sideways or a consolidation could be seen with more stock-specific momentum rather than any big moves in the index.
Okay, fair point. So stock-specific action could continue. Let's look at the Nifty movers on the positive side. You have Sriram Finance, you have Cipla, Hindalco, SBI Life. On the positive side, Adani Ports, Infosys slight gains, Asian Paints, very, very minor gains coming in on all of them. But, the heavyweights are declining like M&M, Maruti, HDFC Bank, Bharti Airtel, ITC. These are the ones that are actually dropping in trade. If we also look at the mid cap, well, on the winning side, you will actually see like Tata Technologies up. Remember, we just discussed that F&O inclusion could start in the March series for Tata Tech. That's and also Irida. Both of them are opening higher. APL Apollo, however, is also up. MRPL, Petronet, Patanjali, Lupin. These are some of the stocks within the mid caps that are opening higher. Within the small cap basket, which is now showing slight strength in the market, you have names like ITI that's jumping higher, almost 5% up. You have 361 WAM, 2.5% higher. JBM Auto, remember, order about the electric vehicles coming in. Inox Wind, Cyient, Zensar Technologies, Happiest Minds, Rights, also up and about, over 1% each for these particular stocks as well. Within the mid and the small caps, how are you going to be approaching the space?
I think mid cap and the small cap both have seen a huge underperformance over last few weeks. It was in yesterday's trading session where a good pullback move was seen, but it was not supported by any breakout and up move in the large caps or the benchmark index. So I think in such phase, the follow-up move is very important. Just based on one day's up move, we cannot conclude that the bottom has been done or the worst is over for the mid caps and the small caps. But I think I would wait for some follow-up action. If follow-up buying is seen in the mid and the small names, then only one should look for stock-specific opportunities. Otherwise, better to be with such stocks which are showing some relative outperformance within the large cap space.
Okay, fair point. Got that. Now there is some decline coming in on the mid and the small caps again. So markets are extremely volatile. Reliance Industries slightly higher. Zen Technology is also up and about 4.5% odd. Carrying on from yesterday's move, your NetWeb Technologies that's also up. Let's discuss this. Rujit, how about Zen Tech and NetWeb? Any moves here that you would like to read?
Not really, because if we look at the recent price-wise correction, then we have seen a significant price-wise correction in the net web as well. Signs of pullback move was there, so one can look for some pullback trades in net web, but not expecting any significant trended phase, because on the high side the stock has recently breached its 200 DMA as well, which on a move should act as a resistance going ahead. So one should take this as a pullback move. Immediate resistance is the 20 DMA itself, which is around 1660. So 1660 will be the resistance for the stock, but we would tend to avoid any kind of fresh buying in this for now.
Okay, let's look at some other stocks that are reacting. India Glycols 5% higher because of the 1260 crore order. Rights up 2%, signs an MOU for maritime infra consultancy, and that's why the stock is up and about in trade. But Bindo Pharma is down because there is warehouses in New Jersey have seen 5 observations from US FDA on that one. Then let's look at some of the other stocks. You have Bharat Forge, its arm has signed pact for artillery cannons, but it's flattish in trade. Irida, Tata Tech, we've already marked. Both are up and about. Tata Investment is actually rallying about 7% in the morning trade. Could you look at this one? The stock has been showing us some ticks on the higher side. Good to look at, or should one stay away?
Positive. Yesterday also in the price up move, we had seen very good volumes happening in the stock. Although on a day-to-day basis, the volumes generally are very low in the stock. But yesterday the price up move was supported by good volumes. So whenever we see such action where price up moves get supported by good volumes, this clearly indicates a fresh buying interest in the stock, which could lead to some further up moves towards 6,700 to 6,800 in Tata Investment. So I think when any existing positions are there, they should continue to hold on the stock from a bit mid-term perspective.
Fair point. Now, with auto space, clearly, I wanted to discuss with you how are you looking at it? Because again, there is this fear of Trump tariff impact coming in, Tesla coming in too. Your suggestion on how are you approaching four-wheelers and two-wheelers at this point in time? They have been continuously facing so much of headwind, and there is this fresh headwind that is again coming on. Your sense of for those who have existing positions on the likes of Eicher, M&M, Tata Motors, for instance, what should they do?
So the auto index has already corrected in last 4 or 5 months along with the markets. The Nifty auto index made a high for around 27,000 in the month of September 24, and right now we are around 21,500. So it's not that it is correcting now only based on the news flows of Tesla coming into India, but I think a price-wise corrective phase has already been seen. There could be near-term concerns because of uncertainties over what would happen, but if you look at the overall demand for auto companies in our markets, I don't think that's going to reduce substantially. And hence, in spite of Tesla coming into India, I think I don't think that would be any major significant negative impact on the Indian auto companies. So I think just a temporary correction is there because sentimentally there is a lot of uncertainty in market participants' minds that what would happen if such competition comes in. But I think from a mid to long term perspective, if we get some more dip in the auto space, then one should look that as a good buying opportunity.
Okay, fair point. Right. Let's also look at some of the other pockets then. Ruchit, I want you to give a sense on the pharma pack. Again, similar story, tariff talk impacting the space. What are you really looking at here? Should one stick with some of the positions that they have in pharma stories, because these were the winners of the last year too? So should one stick around? Should one wait it out to find out what exactly will be the impact, or should one really be now cautious in this space?
I think one need to be very stock specific within the pharma names. I know generally whenever we see the markets going through a corrective phase, pharma is one in a space where a relative strength is seen because the kind of defensive nature it has. But this time it has not been the case. We have seen some no corrective phase in the pharma names as well, and there is no relative outperformance seen. So I think only those stocks which are not correcting in the falling market, no certain CDMO names such as no Divi's Laboratories are there, Suven Pharma is there, which is bouncing again from its support. So I think such stocks where strength has been seen during corrective times, I think that outperformance to continue. But I won't suggest going very aggressively long. And yes, I know as you said that that tariffs in the US on the pharma companies, until the clarity comes that how much the exactly tariff would be there, what impact would it have on Indian pharma companies. I think due to that uncertainty, there would be some lack of buying interest, and hence we would not see any kind of significant run up in the pharma name, at least in the short term. The short-term traders should avoid any kind of trade setups in the pharma names until this uncertainty is over. But only the some of the relative outperformance such as Divis and Suven, which I named, I think that those stocks could continue to outperform.
Okay, fair point. Then let's look at some of the other pockets. In the F&O space, Ruchit, are you looking at any key stocks? Of course, it's the expiry session as well. Do you really look at any stocks today?
Within the metal space, no, JSW Steel is looking good. I think we didn't spoke about the metals. Metals in last two
Yeah.
or three trading sessions have seen a good buying interest, and the dollar index has also seen some cool off from the high of around 110. And there is always an inverse correlation between dollar index and no in the metal stocks which we generally see. So if we see the dollar index consolidating or staying lower at current levels, then I think there could be some good stock specific up move in the metal space, because even in the base metals we have seen a good up move. So I think JSW Steel within this pack is looking quite positive. The stock has shown a good relative strength compared to its peers in last 1 month, where after forming a low of around 860, 870, thus we can see that the stock has shown a good strength. So I think that our outperformance could continue. So and I think selective metal names could do well. JSW Steel is one of those. Another stock that I would highlight is selective cement stocks can do well, because cement is also one pocket where we have not seen any price-wise significant corrections in the some of the larger names compared to the correction that we have seen in the broader markets. Sri Cement within this space is looking positive. The stock is trading around its 52-week high even in such kind of markets. So I think this is one stock where we can see as, of course, it's a big ticket, big price stock. So one should not expect any very sharp up moves, but a slow and gradual up move or a relative outperformance in such falling markets could be seen from these names from the F&O space, such as JSW Steel and Shree Cement.
Okay, got that. And MOFSL has also today come out with a buy call and target price of 1150 on JSW Steel. They have this brokerage note where they believe there is a long-term growth story which looks strong, and muted pricing in the near term is a headwind that one looks at. But the cash flow is strong, and that could be generated to utilize to fund as a expansion plan for deleveraging JST as far as on track to build their achieving their capacity as well. So all of those factors are important to watch on JSW Steel. Let's look at a few more pockets then in trade today. Let's actually look at the power space too. HSBC has upgraded Tata Power from reduced to hold now with a target price of 345. That's also seen an uptick from 300 earlier. They're talking about improved execution amid weak macros. They're doing well on the modules and the cell manufacturing, although they believe that weak power demand and pace of both PPA and Discom privatization project execution has driven the stock correction thus far, but they don't see any negative catalysts right now for the stock. On the NHPC front, CLSA has come out with a report where they have upgraded the stock to high conviction. and they have an outperform on this one, a target price at 117. They believe the stock could double in the next 4 years, and after the recent 25% correction in the recent 6 months, that gives an investors an inexpensive opportunity to accumulate the stock. Let's discuss this with Ruchit. Two stocks from the power space, Tata Power, NHPC, brokerage houses coming out with their updates. And this was an erstwhile favorite space to be in, but has been lying low because of the market correction overall.
Yeah, I think definitely first we talk about NHPC, then I know most of the PSU names have been correcting since last 6 or 7 months or more. And NHPC has also seen such price-wise correction. So, if one is looking from a long-term opportunities, then definitely one can start buying over here. But I won't suggest putting 100% of what you want to invest over here. But at least one can start with investing 30% of whatever amount is one is looking to invest. And if we get any small dips in the near future, then use dips as a buying opportunity. So I think looks for the post the recent correction, these are good levels where one can start entering in NHPC from a long term perspective. Even I think similar approach can be kept for Tata Power as well. While the longer term trend has not changed yet, but in the near term there are no signs of any kind of trended up move. So I think some more time wise correction or consolidation could be seen over next few weeks in Tata Power. So one can look to accumulate this stock from a long term perspective. But as I said that one should not go 100% over here, but at least 30% of whatever wants to invest can be done at current levels.
Okay, fair point. Let's look at some of the other pockets. I wanted to discuss the city gas distributing pockets with you, Ruchit. Why? Because again, there is a lot of brokerage house updates that's coming in. City has come out with a report. They believe that although city gas distributors are acknowledging the end of exclusivity as an opportunity, but not a threat, and the introduction of competition offers IGL, MGL to expand geographic front, either through M&A or by entering into newer geographic areas of small players as well. There's already a lower risk of competition for IGL, MGL, they believe, and they are their preferred gas picks along with GAIL also. But they see potentially higher risk for Gujarat Gas because that has an exposure to industrial segment. On IGL, Jeffries has a buy call with a target price of 252. They believe the stock has already declined 30% since October, and now there is a margin defense and support of volume growth that could also see a price hike in the near future, and therefore one has to keep an eye out on this one. On Petronet LNG, JP Morgan has an overweight call, a target price of 377. They believe they are going to be starting off new 5 million tons per annum capacity at Dahej, and that should add to the EBITDA as well. Summer demand of the power should also support the LNG players too. And they are actually seeing support for LNG imports as a seasonality. Competition of tariff renegotiation with GAIL, IOCL, BPCL can remove the overhang, is what they are saying. So let's look at this factor as well, Ruchit. The entire city gas distribution front. What do you find attractive at this point?
So from a short-term perspective, I think these stocks are more into a time-wise corrective phase where we can clearly see that the stocks are not correcting the way the broader markets have seen correction in last few weeks because the prices have already seen a correction from the highs. MGL, IGL both looks positive from a longer term perspective, but not from a trading perspective. So I won't recommend going very aggressive in the stock at current levels. One is looking for next few weeks, but rather more time-wise correction or consolidation phase could continue.
Okay, fair point. You can actually see the markets declining because it's the Nifty bank that is facing some pressure, especially led by financial services stocks like Bajaj Finance, that's down in trade today. And the reason why it's also down is because UBS has a sell call today with a target price that they have at 6,800. And you can actually see some of these heavyweight counters declining, although it's improved from the opening lows. Banking financial names, Ruchit, how are you approaching? This was being seen as a safe haven in the new year because this was the pocket that had hardly moved in the previous year, and there was a long time move that was awaited. It has time and again tried to show some bounce, and they are all waiting probably for FIIs to return, because once the FIIs return, this is the pocket that is expected to show massive uptick and a recovery. How do you think investors' approach should be on PSU banks, on private sector banks, and on NBFCs at this juncture?
So, Sakshi, at least some signs are there that the selling interest has reduced in the private banks at least. what we can see that Nifty is trading around its January lows. Most of the sectoral indices have breached their recent January lows and formed a lower top, lower bottom. But Nifty Private Bank and Nifty Financial Services, these are two indices where the indices are much above their recent swing lows made in January. And you can see some of the sector heavyweights which are there, they are not showing any significant price wise correction on a sustainable basis. So we believe that yes, the private banks and certain financial services names, I think that's where the bottoming out process has started, and the downside seems to be very limited from here on. Look at stocks such as Kotak Bank, which was in a consolidation phase of about last 4 years, and after that 4 years of consolidation, post the recent numbers, the stock has started witnessing good buying interest, and that high top high bottom structure has made. Even in the NBFC space, stocks such as Bajaj Finance, Cholamandalam Investment, where price volume action has started turning bullish. So I believe that whenever the market turns, whenever the benchmark indices or the frontline stocks witnessed a buying interest, the leadership could come from the private sector banks and the NBFC space, certain selective NBFC space, where the price wise corrections I think seems to be over. So we would just recommend going long on such names, from a bit positional perspective. Kotak Bank, of course, remains a preferred pick within the private bank's name. And amongst the NBFC space, buy and dip strategy could be kept for Bajaj Finance and Cholamandalam Investment.
Okay, fair point. I hope this has also got some clarity for all our viewers right there. So let's see how this space also shapes up. Any other pockets that you have identified where you believe more value can be seen after the recent dips have come in? Anything that you believe that now is the time that investors can start looking at buying or accumulating?
So I think certain stocks where we have seen that price-wise downside seems to be very limited. From a stock-specific perspective, SBI Card is one stock where positionally the chart structures have turned quite positive. We have seen a long phase of consolidation happening in SBI Cards, and finally that high top high bottom structure has started since last 1.5 months. Also, if you look at the month of since the month of January, where the markets have seen such correction, the SBI cards have seen a good price up move from the lower levels. So there are some good signs from selective names such as SBI cards, which is looking good. UPL is another stock which we spoke about, where from after a good price-wise corrective phase, stock seems to have bottomed out as it has given a breakout from a consolidation phase, and that higher top bottom structure has resumed over there too. So certain stocks which you can see that are not correcting in this market, which have not corrected in last 15-20 trading sessions. I think that's where the strength is seen, and we could see some good recovery going ahead in such name. But of course, in the near term, the volatility is expected to remain high. But if one is looking from a positional perspective, then stocks such as SBI Card, UPL, these are looking good to buy at current levels.
Fair point. Okay. Let's actually look at some of the other pockets where we are seeing some, move in trades today. Let's actually look at the metal story unfolding. Some signs of pickup coming in on this one. Richard, do you think this is a space that interests you?
Yes, selective metal names, I think, the selective metal names can do well. We have already seen some corrective phase in some of the metal names. And
Yeah.
dollar index have started correcting from their highs. Although there are no signs of a big correction in the dollar index, but even if it stabilizes and shows some consolidation, then at least a short-term pullback move can be seen in metal names. JSW Steel is looking much positive over here. I know that remains a preferred pick within the metal basket.
Okay, let's look at the broader markets then, small caps especially. RITES is the one that's actually jumping. Of course, order flow news coming in 6% higher. Ruchit, are you going back to the railway or the defense story at all? Defense showed a lot of momentum yesterday. There is again a lot of order flow news coming in selectively on some stocks as far as the railways are also concerned. What is your approach here?
Waiting for some follow-up moves, because very beaten down stocks, the momentum readings were quite oversold in many of the railway stocks. So, of course, a short-term pullback move could be seen, but whether this pullback move could see a sustainable uptrend, that needs to be seen. So, selective exposure can be taken. Amongst the defense names, Mazgaon Dog and BEL, these are two stocks where the chart structures, the positional chart structures are positive, and post the recent correction, both the stocks are trading around their mid to long-term support. So, if one has to take some exposure within the defense space, then stocks such as BL and Mazgaon Dog could be bought.
Okay, got that. I hope this has also given us some clarity as far as the space is concerned. Now let's go back to our, we haven't discussed for a fairly long time as far as quick service space or the food delivery space is concerned. So Zomato and Swiggy both are down in trade today. What's the approach here? They have been showing a lot of volatility. Do you think this is a time to accumulate, or do you think there could be some more shaving off of the gains from where these stocks had shot up to?
Swiggy is difficult call to take technically, but Zomato definitely, when previously also whenever we see such price-wise corrective phases at lower levels, the buying interest were quite strong. So I think for Zomato, the price-wise downside seems to be limited from here on. On the weekly chart, there's a good support range around 195, 210 zone. So I think downside seems to be limited. One can look for buying approach from a bit midterm perspective in Zomato, and no, but keep some room that in case if the stock sees some another leg of correction from current levels, that at lower levels, then one can do some averaging as well.
Okay, let's look at some of the other spaces as well to see if there is anything else that's looking interesting in the markets. Okay, let's look at this renewable energy space, inox, wind. The spaces as a whole, because this is again going to be important to watch as to how things will shape up. Anything interesting in the renewable energy space, solar energy space that you're looking at the current juncture?
Well, there are no definite signs, no stock showing any kind of reversal patterns over here. So we don't have much exposure to this space, and no, we are not recommending anything for now. But yes, in case if we see some any kind of price up moves getting supported by good volumes in the near future, then no, we will definitely have a look at this one.
Okay, fair point. Let's look at the F&O space. JSW Energy, APL Apollo Tubes, Deepak Nitrite. These are the ones that are actually on the higher side in trades today. But on the losing side, you have Coforge, Adani Total Gas, Maruti Suzuki as the ones that are declining in pace. Nifty gainers at this point are Shriram Finance, Hindalco, NTPC as the top movers in trade. You also have some of the other pockets, but largely the markets are still skewed toward the negative side in trade. Um, Sriram Finance, let's look at from the Nifty movers today. Do you think this is a move that will be continuing? Should one chase it?
Yes, overall structure looks positive for Shriram Finance. The stock no, has seen some consolidation around 500, 520, where a good support base has been formed for the stock. So here also price-wise downside seems to be limited. Technically, the short-term breakout would be above 577. So will the stock manage to surpass that 577 mark, then we could see some good follow-up action in Shriram Finance.
Okay, fair point. I hope this has also given us some clarity as to how should one look at it. But mid caps, I think, are showing smart recovery from the day's low. They've recovered almost 568 points from the day's low, and now are turning flat, absolutely 0.1% or 0.2% higher. That one can really look at. In fact, there is a smart recovery, 218 points now higher in trade, 0.4% uptick for the mid caps, 50,736 currently. In fact, from the lower levels, almost 600 point of a recovery is what you can see. Um, how are you looking at this one, Rujit, this smart recovery that's playing out on the mid caps?
So a lot of beaten down counters are there, Sakshi. We have seen very sharp corrections as well in last couple of weeks. So I think oversold zone were there. And I know both the indices, mid cap and small cap, were trading around its support. If you look at the mid cap space, then mid cap index is trading in a falling wedge kind of pattern, and it's around the lower end of that pattern. And even the small cap index has taken support in last three trading sessions around its fourth of June lows, which were the panic lows formed on the election results day. So already a good sell-off has been seen. Previous swing low supports are there. Things are a bit oversold, so hence at least a pullback move can be anticipated, which we have been seeing since yesterday. So I think one can see some more pullback move to relieve the overbought setups in the short term.
Okay, let's look at a few counters here. APL Apollo, Tata Tech, Petronet LNG, SJVN, again the solar play that we were discussing, renewable energy play, solar industries, that's also up and about. Cummins India, IGL, we have discussed the Petronet IGL entire city gas distributing space too. Irida we've discussed in terms of how the inclusion in F&O series will happen for Tata Tech also. These are all the stocks that are up and about. You have MRPL sale. We've discussed select steel pockets also for all our viewers today. BSE is doing some smart recovery, 3% higher for Bombay Stock Exchange. Capital markets again on the move. Do you think this is to do with the NSE valuations that everybody is talking about in the unlisted space, and therefore the IPO of NSE could be garnering more strength and action? So right now, of course, it's very difficult for people to get unlisted shares. But once it also comes into listing space, if the valuations are very high, if it comes in at a higher price band, do you think it is a great alternative to look at BSE at this point in time for those awaiting the NSE IPO also?
I'd say if one has already invested, then one can continue to hold on. Because till NSE IPO, I don't think there would be significant price-wise corrections in BSE. And even recently, we have seen that many stocks from the capital market segment has seen a price-wise correction in the last 1 month, along with the broader markets. But BSE has been quite resilient, and the stock has not breached even its short-term support levels. So the trend, of course, remains positive. But any existing long positions, one should continue to hold on.
Okay, fair point. All right, last few minutes to go. Ruchit, any key stocks that you'd like to recommend for the day for investors and viewers of Business Today?
So JSW Steel, I think, is one stock where looks positive. One can look for buying opportunity over there for the day. And from a short-term perspective, UPL is another stock which I said at the start of the show that the overall trend looks very positive. So quite bullish price volume action has been happening over there. So these two names remain in focus if one is looking from a trading perspective.
Fair point. Okay, Ruchit, we'll thank you then on that note for being with us on the morning edition and helping us navigate through the fresh moves in the markets right now. We are 300 points lower on the Sensex right now, 315 points lower on the Nifty Bank, 49,245 for this one. As far as the benchmarks are concerned, but we are seeing a lot of stock-specific action that continues in the mid and the small caps. That's where the recovery is again taking place. Autos are declining. Again, fears of tariff talk emerging. You have Pharma that's on the back foot again in trades today. But among the other key sectors that are probably showing us some strength beyond the broader markets too, then you'll see that metal space is showing us some pain on the positive side, 0.7% higher. PSU banks 0.3% up, oil and gas 0.2% higher. You also have the mid and small cap financial services space that's also up, but largely the others are still down in trade. The Nifty Bank is the one that's really not supporting the move. 0.7% declining for the Nifty Bank, and there you see some declines. Autos down by 0.5%, IT down by 0.3%, FMCG down 0.7%. So you have both the defensives as well as some of the major frontline stocks that are declining. Largely, it has to do with the Trump tariff talk. That some of the pockets are still feeling the heat as far as the markets are concerned. On the Nifty, 0.5% of a downfall, you can again see a 22,821 currently. So we'll see whether this has to improve. Broader markets, again, there's a lot of action. India VIX at 15.6, 1.2% higher in trade. All right, viewers, we'll look to wrap up the morning edition right here. But keep an eye on the markets, broader recovery that's keeping up in mid and small cap space, and the key select stocks from there that are reacting to news. So capital markets related stocks, you can keep an eye out on. BSE, we just discussed. Angel One is also picking up pace. So you can keep an eye out on that as well. But what we'll do is we'll wrap it up at that. But throughout the course of the day, you will see a lot of coverage on the market space. And of course, we have this a very special event today, Best Bank Summit, and that's something that you will be getting exclusive views from top bankers discussing the future of the banking trends, fintech trends. So throughout the course of the day, you will also get to see that. Stay tuned with us on Business Today Television to catch all those updates from Mumbai.
মহাকুম্ভ আমি নাইবা বললাম, ওটা এখন মৃত্যু কুম্ভ হয়ে গেছে।
दुर्दशा हुई है, जो व्यवस्था खराब हुई है, क्या हम किसी भी धार्मिक कार्यक्रम में मुनाफे की सोच सकते हैं?
अरे सब कुंभ का क्या कोई मतलब है, फालतू है कुंभ।
The Mahakumbh, a revered spiritual event in Uttar Pradesh's